How has the war in Ukraine impacted the real estate market, and what should we expect in Yorba Linda during the spring market this year? That's what we're going to talk about on today's episode. Hi, I'm Josh Alexander from the brokerage and your host of Discover Yorba Linda, your one-stop shop for all things Yorba Linda. On today's episode, I'm going to be going over my March update for Yorba Linda's housing market and really go over what to expect over the next couple weeks and months as we fully enter the spring housing market in Yorba Linda. So let's go ahead and get into it. Okay, so today's episode, we're gonna break it down into three parts. First, we're gonna go over the data. So if you're not a data nerd like myself, you can kind of skip through or breeze through this first part. Then we're gonna go into how the war in Ukraine is impacting the housing market. And then finally, we're gonna put it all together and really go over what that actually means for you as a buyer or seller if you're thinking of selling or purchasing a home in the spring market this year. Okay, so let's go ahead and take a look at some of the data. So in Yorba Linda right now, we currently only have 29 active homes on the market as we speak. And because of that, and because demand is so high, the average days on market in Yorba Linda is only 17 days. So from the time you put your for sale sign in the ground to the time you go in escrow, it's only taking a little over 2 weeks on average right now. And oftentimes it's much shorter than that. So if you place your house on the market at fair market value, you're going to get multiple offers very quickly and be able to sell your house not only for the greatest price, but also dictate most of the terms in the contract as well, because sellers really do have most of the leverage at this point in the current market that we're in. For the month of February, the lowest price home that sold in Yorba Linda was $310,000, and that was a one-bedroom, one-bathroom condo. And on the high-end side, the highest priced home sold for $3.75 million, and that was a six-bedroom, six-bathroom home that was a little under 5,700 square feet. So that kind of gives you a range of where things are selling for in Yorba Linda right now. So over the last 2 weeks, demand has jumped by about 10%. So demand is already off the charts, as everybody knows at this point, and it's continuing to get stronger. However, one thing to note is typically the demand is going to peak sometime between April and May, so sellers take note of that. It's something I'll bring up later, but it looks like right now we're still seeing demand increase week by week as people are trying to find homes. Now on the supply side, this is where the real story is. This is what's driving the market right now. So supply has only been going up by about 4% over the last 2 weeks. So supply, I've said it over and over again, is extremely low. Right now, it's the lowest it's ever been in Orange County for this time of year. So it's very hard for buyers to find homes right now. 18% fewer homes have hit the market this year compared to the normal average that we see on a typical yearly basis. So we're just not getting enough homes on the market in Orange County to replenish the stock that's being taken off by all of the buyer demand right now. So now let's go ahead and shift to how the war in Ukraine is impacting the real estate market. And it really comes down to two big things. One, interest rates, and two, mortgage applications. So interest rates since the beginning of the year have been on an upward trend. However, when the war started, we did see a decline in interest rates going from about 3.92 down to 3.76 over the first 2 weeks that the war started. However, over the last weeks, we are seeing interest rates start to creep back up again, and now they're hovering right around 3.85. So they are going back up. We saw a temporary dip, and because of that, when you look at mortgage applications, we did see a giant spike in mortgage applications, an 8.5% increase over that same time period as buyers entered the market trying to get approved for a loan to take advantage of the interest rates as they did drop. So we should reasonably expect to see a little bit of a surge in demand over the next couple weeks and maybe month or two from all those buyers that applied for a mortgage and are now looking for homes. So sellers, another thing to take note of, which we'll go into a little bit more detail later. Okay, so supply is very low. Demand is continuing to go up right now. Interest rates did drop. Mortgage applications increased. So what does this all mean for buyers and sellers in today's market? Let's take a look. So let's start with the buying side. So buyers, if you are finally starting to get excited about interest rates again, because since the beginning of the year they've been going up and now they started dropping, that excitement probably faded pretty quickly this week when we saw interest rates pop back up to 3.85%. So unfortunately, yes, at the very beginning of the war, it caused a lot of uncertainty and the markets reacted, so we saw interest rates drop. However, as it's dragged on, unless something significant happens that's going to cause more economic turmoil throughout the entire world to cause that uncertainty to continue, you can expect interest rates to slowly continue creeping up as they have been since the beginning of the year. Now, the only glimmer of hope I have for you right now is that we are going into the spring season. So what that means for you is during the months of March, April, and May, we typically see the most amount of homes per month hit the market. So that means that if you've been trying to find inventory, you haven't been able to find homes, the best chance you're most likely going to have this year of new homes hitting the market that are going to interest you is going to happen over the next 3 months. Yes, demand is extremely high, so you're still going to be competing with a lot of other buyers for those same homes. Inventory is just way too low right now, really, to get us out of this hot sellers market anytime soon. However, as the weeks and months go on, you'll have more and more opportunities because you'll have more homes hit the market. So that's something that will at least give you a glimmer of hope. And if you've been looking for a while, stick it out a little bit longer, because I think you'll start seeing more options that are going to appeal to you as we go into the spring market this year. So now I want to go ahead and answer some of the common questions I'm hearing from buyers right now that's kind of preventing them from wanting to enter the market, or at least hesitating a little bit. So number one is, I'm waiting for the foreclosure crisis to happen, so all these homes that were in forbearance are all of a sudden going to flood the market, prices are going to drop, and then I'm going to scoop up a home at a great value then. I've said it time and time again, and the data is becoming clearer and clearer every single month. That is just not going to happen. There's nothing in the data that shows you're going to have enough foreclosures hit the market to have any kind of impact on the housing market whatsoever. At this point, can you guess how many homes we have in Orange County on the market right now that are either in foreclosure or a short sale? 3. That's it. We're just not going to have enough of these foreclosures to hit the market to really impact the market in any way whatsoever. So it's something you need to understand. On top of that, the homes that are in foreclosure, they're not selling them for a loss, because we've had so much equity gain over the last 2 years. These people that are in foreclosure right now are able to sell their home at a normal market price and able to take that money, profit from it, and then either go rent or go live with family or friends for a while. You're not seeing these homes come on the market at a reduced price. They're going for market value. So if you're waiting for that foreclosure crisis to happen, you're going to be waiting and watching prices go up and interest rates go up until you're priced out of the market. Okay, Josh, fine. I'll agree that the foreclosures are not going to impact the market. However, prices have been skyrocketing. Aren't we in a housing bubble right now? Can't I just wait for the housing prices to crash, come down, and I can scoop another deal up as prices fall? Again, we are in a completely different market today than we were back in the housing crisis that happened in 07 through 09. The fundamentals and the data both show that that type of housing crash is just not going to happen anytime in the near future. So let's look at some of the key differences that kind of show you where we are now compared to where we were then. So the first one, let's go ahead and start with loans, because that was fundamentally one of the biggest reasons we had the housing crisis to begin with. So before the housing crisis began, the years leading up to it, lenders were giving out loans to pretty much anybody that had a pulse. So they didn't care how much you were making. They didn't want you to prove how much you were making. You just basically said, hey, I made $1 million. They're not verifying it. Everybody was getting loans at that point. So because of that, you had a lot of people in homes that shouldn't have been in homes, that could not afford the homes they were in. So that was the biggest cause of the housing crash. So because of that housing crash, there was a bunch of regulations that were put into lending practices now that really make it tough for you to get a loan. So just take a look at this data up here, and this shows the average credit rating of people that were getting approved for mortgages before the housing crisis, and the average credit rating for people that are getting approved for mortgages now. So not only do they have higher credit ratings, their debt to income is correct, they are making them prove that income is coming in from their job. They're calling them once or twice during the transaction to make sure they still have a job. So people getting mortgages today are much better equipped to actually pay those mortgages every month when those bills are due compared to where they were before. So let's look at a second data point now, and that has to do with inventory. So let's check out this graph up here. This is showing that during the housing crisis, we had anywhere from around 8 to 9 months of inventory on the market at one time, which means that if everybody stopped placing homes on the market today, it would take about 8 or 9 months for all these homes to be purchased up until we had zero inventory again. Today, we have less than 2 months of inventory on the market right now. So if people stop placing their homes on the market, in less than 2 months, all of the inventory in the US would be gobbled up. That's how much less inventory we have today than we did back in the housing crisis. So inventory is extremely low right now compared to where it was before. The lenders are only giving out loans for people that actually qualify, so people that currently have mortgages can actually afford to pay them, making foreclosures much less likely. And on top of that, right now, even though interest rates are hovering in the 4%, that's still historically some of the lowest rates we have ever seen. So people are still trying to get into the market to take advantage of these low rates because 4% rates are still extremely great, especially if you can lock it in for 30 years and have that predictable monthly payment every single month versus renting and not knowing how much your rent's going to go up every year when you renew your lease. So the fundamentals, again, are really showing that right now is completely different than right before the housing crisis last time. So the chances of any kind of market correction happening anytime in the near future are almost zero at this point because inventory is so low. And in the distant future, because fundamentals are so strong in the housing market, if we do see a slowdown or even a slight correction in the next couple years, we're not going to see a 20, 30, 40% drop. We might, however, start to see eventually some kind of leveling out and maybe a slight dip. But if you're waiting to buy a home for another couple of years, in the meantime, appreciation is still happening and most likely interest rates will continue to rise. And so you're just pricing yourself out of the market. So if it does drop by 5% in 3 years from now, you're still better off purchasing a home now than waiting for 3 years as appreciation goes up by another 20% and then buying when it drops by 5%. So I hope that makes sense and you can kind of understand the long view that you need to take when you're purchasing a home. So if you're not an investor who's looking to buy a home, flip it, and then go sell it really quick, if you're buying a home as your main residence, you're planning on being there for 5+ years, the biggest thing that buyers need to be looking at right now is, can I afford my monthly mortgage payment? Does it make sense to me and my family to be able to purchase a home, have those predictable payments, and be able to lock those in for the long term and be able to have some place I can call my own? If that makes sense and you're able to find homes in your price range, in the neighborhoods you want, right now is still a great time to buy a home. However, you have to understand what the market is right now and expect it might take a few offers to be able to get into escrow because there's just so much competition at this point. Okay, so now let's go ahead and switch it up and talk about sellers now. So sellers, as you've heard since the beginning of this episode, it's an extremely good market for you right now. The hottest sellers market that we have been in ever in any kind of recent history. So if you place your home on the market at the right value, you're going to get multiple offers. You're most likely going to sell it within the first weekend, and it's going to go for a high price, great terms, and you're going to set yourself up for success. Now, all that being said, I do want to bring up some of that data I referenced earlier in this episode and go over that with you to kind of give you an idea of what you should be expecting over the next couple months. Demand for homes is going to typically peak in Orange County around that April to May timeframe. So that's not that far from now. So if you're thinking of getting your home on the market and you want to make sure you're taking advantage of all this crazy market activity we have right now, as well as that surge of buyers that we are having enter the market because of that temporary drop in interest rates, now is definitely the time to get your house on the market. If you need to sell your home and then buy another home, if you have kids and you're thinking this is too soon right now, my kids don't get out of school until June or something like that, you might be able to wait a few more weeks. But if you go too much farther into the beginning of April, you're going to start seeing a lot more competition, i.e. other homes hit the market at the same time as you, which is still going to give you lots of buyers in today's market. However, it will start shrinking as demand peaks and more inventory reaches the market. You will have less and less leverage as the spring market goes on. So if you're thinking about trying to get the best terms as well as the best price for your home, get your house on the market as soon as you can. Remember, in this market, you can dictate not only the price, but the terms as well. So you're able to say, I would like to get an escrow, close in 30 days, and then be able to live in the same property for another 2 months after that. Will I go find a new home and close escrow on my new home? And by that time, the kids are out of school, you can move once, and you don't have to move in the middle of the school year and make your life easy. It's all about how you structure the offer. So if you have questions on how to do that correctly, feel free to DM me anytime. I'll be able to explain the process of buying and selling a house at the same time and how to keep yourself protected. Otherwise, just know that even if you put your home on the market now, there's ways to extend escrow so you're not having to actually get out of your current home until the summertime hits. If you're finding this content useful, can you please hit that like, subscribe, and that bell button below if you're watching this on YouTube? I'd really appreciate it. And if you have any family or friends looking to purchase or sell a home in Yorba Linda that might find this information useful, I'd really appreciate you sharing it with them as well. So that's all I have for you today on the March housing market update. Again, I hope you found it useful, and until next time, stay happy, stay healthy, and I'll see you on the next show. Bye.